To understand the American economy, look at the gap between the pristine glass of the financial district and the industrial grit of the street below. On July 4, 2025, the One Big Beautiful Bill Act, the OBBBA, was signed into law. It was marketed to the public as a populist victory for the everyday worker. But this chart shows the immediate macroeconomic cost. The Congressional Budget Office estimates the bill will add nearly $3 trillion to the national debt over the next decade. The OBBBA rewrites the mechanics of the tax code to force the middle class to fund the incentives offered to those at the extreme ends of the economic spectrum. We can analyze this using a barbell framework. The OBBBA pushes financial advantages to the far ends, transactional earners on one side and the equity class on the other. Whether at the absolute bottom or top, the government carved out a specific loophole for you. This architecture creates an inescapable vacuum in the middle, effectively building what is now known as the middle-class W-2 trap. On the left side of the barbell, we find transactional income. The code targets working-class voters with highly visible deductions for tips and overtime pay, allowing people counting their cash or clocking extra hours to claim dollar-for-dollar tax relief. It adds a $10,000 deduction for interest on new car loans, a move designed to stimulate consumer retail spending immediately. It also introduces Trump accounts, permitting parents to save up to $5,000 a year for their children in tax-deferred savings. But there is a structural catch. While these working-class cuts generate immediate headlines, they are designed to expire by 2028. Now look at the right side of the barbell, where the equity class manages its capital. Here, the tax code makes the 2017 tax brackets permanent and quadruples the SALT deduction cap to $40,000 for high earners. The real driver of long-term wealth, however, is the expansion of qualified small business stock, or QSBS. This chart illustrates the disparity in scale. Startup investors can now shield up to $15 million in capital gains entirely from federal taxes. Unlike the temporary breaks for workers, these equity class benefits are permanent, cementing a path for long-term wealth consolidation. This leaves the space connecting the weights, the traditional salaried W-2 employee. Salaried employees rarely receive tips or overtime exemptions, and they don't have $15 million in business stock to shield. Their only benefit is a slightly higher standard deduction. This leaves the middle class as the primary, unprotected tax base, forced to pay for the government's rising shortfall. To pay for the multi-trillion-dollar deficit created by the barbell's incentives, the government is cutting deep into the social safety net. The bill implements a 12% cut to Medicaid funding, a reduction so severe it has already begun to force the closure of rural hospitals and clinics. It also tightens food assistance, expanding work requirements for SNAP benefits, and shifting billions in costs onto individual states. By repealing clean energy tax credits, the law has already stalled hundreds of manufacturing projects, resulting in the loss of over 100,000 projected green-collar jobs. In effect, the working class is trading their long-term social safety net for tax breaks that disappear in 3 years. The Congressional Budget Office released final data on the long-term impact of these policies through 2034. This chart tracks massive income divergence. By 2034, the top 10%'s incomes rise by 2.7%, while the lowest 10%'s incomes fall by 3.1%. The collateral damage is historic. Nearly 11 million Americans will lose health insurance coverage entirely. By concentrating permanent benefits at the top while cutting services for those at the bottom, the OBBBA realigns the tax code into a machine that automates a massive, relentless shift of wealth upward. The traditional path of salaried work has been structurally penalized. The middle class is now footing the bill for a multi-trillion-dollar deficit, while those at the ends of the barbell cash out. Look at your own tax return. Stuck in the W-2 trap or winning the OBBBA game? Tell us in the comments and subscribe for more deep dives.